On Dubai Eye on One.
Let's talk property now, if we can, because some interesting figures coming out of the UK. Interesting figures for being compiled by all the team, I should say, at Knight Frank. So, according to their latest data, investors from the Middle East are beginning to return to the UK's property market. It's big numbers as well. 16% of all UK property sales to overseas buyers in the first 3 months of this year were to Middle Eastern investors, according to that data from Knight Frank. Let's get more on it as we speak to the head of the private office for Knight Frank here in the Middle East, Henry Faun. Morning, Henry.
Tom, good morning. How are you?
Yeah, very well indeed. Thanks so much indeed for joining us live on the line. Also live on Microsoft Teams. Nice to see you this morning. Yeah. Let's dive down into these numbers if we can, because a lot of people are looking at it and going, hang on, there's lockdown on. We can't get in and out of the UK at the moment. So why are we seeing these positive property numbers coming out?
Excellent. Well, there's two parts of this that are particularly positive, Tom. One is that the prime central areas of London, those perhaps you can see here behind me on the map, they have actually grown for the first time in the past 5 years by 0.3% in the year to May, which is fantastic news. Second, you mentioned there the Middle Eastern purchases coming in. We've actually seen that of all overseas buyers coming into the central London markets, 16% of those were actually from the Middle East, as opposed to the prior 6 months, which were averaging around about 10%, Tom.
What's buyers from the Middle East to now invest into central London?
Well, the last time we saw growth in the central London market on this scale was actually prior to the EU referendum back in May 2016. Since then, we've seen a cooling off of the market to a degree where perhaps prices have come down to almost 16 or 17%. Many of our Middle Eastern buyers now, Tom, that are dollar-derived, are seeing some very good value there after 5 or 6 years of cooling prices in the central London markets.
In terms of, the other thing that sort of surprises me a little bit is obviously confusion and uncertainties, not just around COVID-19, the pandemic, but Brexit most recently, stamp duty increases. Is that not putting people off?
Certainly the stamp duty, I would say, is perhaps more of a consideration than the EU referendum changes for our Middle Eastern specific buyers, Tom. But when you look at where the prices have come down to, if I said 16 or 70% cooling off in the past 5 or 6 years, our forecast for this year and next year, 2022 growth, we're forecasting 7% growth. We've just revised that upward from 6% for 2022. So if you said the new taxes that have come in this year, an increase of 2%, actually, in the grand scheme of things, Tom, if you're looking at a property purchase, will make little difference if you're holding onto it for the next 5 or 10 years.
Now, Henry, if I were looking for a property purchase at the moment, especially in central London, I'd quite like to see, smell or touch what I am buying. Without travel possibilities at the moment and the lack of opportunity, how are people buying properties? Literally on view?
Sometimes we do, yes. We transact after we've conducted perhaps live viewing tours. We all have the technology to conduct these days. For all of our instructions, we encourage that in the first place, whether it's a live tour, 3D walkthrough on a computer, or something similar.
Is that going to be something that we are just going to get used to moving forward from now? It used to be that, you meet somebody at the doorstep at a certain allotted time, you have a little look around. Are people more willing to buy online now or buy virtually?
I would hope that in viewing first-person transactions in terms of the first viewing will take place in person going ahead. However, I would hope that the technology that we've all incorporated into our property viewings, such as those live walkthroughs or 3D tours, will be retained for the future.
In terms of opportunities at the moment, if these numbers are set to stay or if they're set to continue in an upward fashion, is this, in your opinion, a buying opportunity or more of a selling opportunity?
Good question. If, for example, we were holding properties for the past 5 or 6 years, Tom, and they've come off by 16 or 17%, I would say this is probably not the best selling opportunity today. Certainly, if we're looking at it from a buyer's opportunity, yes, it is there. Our forecast is for this central areas of London to increase. Now, that's only going to increase a little bit further, the demand for this, pent-up demand even, as flights and travel open up to the UK from the Middle East.
And what is on the shopping list at the moment from the Middle Eastern buyers that you've seen? In terms of the data, what sort of properties are they after?
Yep. Twofold, actually. We've actually seen more demand for outside space in the conversation that we've all had over the past year or two. In the central London areas, though, we've seen demand for some of the highest quality areas around the River Thames, Mayfair, Knightsbridges, or otherwise. Certainly new build property. We've had particular success with the Old War Office, the OWO building in Whitehall. These sort of high-end schemes where Middle Eastern buyers can go there and perhaps enjoy hotel-level facilities whilst not actually being in a hotel.
In terms of value for money, is there value to be had there at the moment, not just in terms of the property, but with regards to prices of the property, but also with pound sterling at the moment and the transfer rates with dirhams?
So we will have seen that sterling has actually increased a little bit on the dollar. I'll call it in this case. That's more perhaps applicable for the wider region as well, Tom. We actually conducted a little bit of interesting research, which I found particularly insightful, is that actually if we looked at a prime central London property of us here from the UAE with our dirhams, our relative discount on the cooling of the prices in London and the discount from the falling sterling after the EU referendum was about 24% back in December last year. If we looked at it in May last month, that has actually fallen to 19%. So we've lost out on a little bit of that discounted value already.
In terms of our understanding and our definition of central London as well, I mean, I lived in London for 10 years before moving here, and obviously you notice that the idea of central London is continuing, London itself is continuingly growing all the time. Is the interest going a little bit further afield? Are we heading to the burbs yet?
Getting there slowly, Tom. We've actually seen some huge increases in the prime outer areas of London, probably on the edge of my map here. And we're seeing areas like Richmond, Dulwich, perhaps, these sort of places increasing by about 6% over the past year, whereas somewhere like Wimbledon, with good-sized houses and apartments there and a little bit of outside space, certainly Wimbledon Park as well, increasing by sort of the record there all the way up to about 8% increases.
And finally, is it just London that is generating the interest at the moment, or are you at Knight Frank also seeing interest in other UK cities?
We're certainly seeing interest across the board in the UK. The stamp duty holiday has assisted with that.
Henry, really appreciate your time this morning. Lovely to chat with you and loving the map as well. Great addition to proceedings. Thanks so much indeed for being with us this morning. Henry Faun is the head of the private office for Knight Frank Middle East. Their latest data is showing that investors from the Middle East are beginning to return to the UK property market. After a cooling, there seems to be plenty of opportunity arising there.
He mentioned the Old War Office there.
Yeah.
This is an old building in London that Churchill used during the Second World War. A two-bed apartment starts from £5.8 million.
Hello.
And it goes upwards from there. So when people talk about the Dubai real estate market being good value, we think 2.8 million dirhams for a two-bed apartment is quite a lot down in the downtown area. But the kind of buyers who are here at the moment are the kind of people who will be buying 10, 15, 20 million pound apartments in London for cash or Hong Kong. And therefore Dubai real estate is relatively cheap.
Yeah.
You couldn't find a two-bedroom apartment in Dubai for, what's that, multiplied by 5? That's 30 million dirhams.
Mm.
You couldn't find a two-bed apartment in Dubai for 30 million dirhams.
Mm. Yeah, no, you're right. It is the swings and roundabouts of real estate the world over, and it just shows you. I mean, I suppose a number of people in the UK are just being priced out of the market at the moment, and hence why you see investors not just from the Middle East, from other parts of the world, also looking to cash in on what remains to be a good investment.
More to